Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Hi, I'm Daniel DeBow. Welcome to Top Stock Picks of the Week. Today I'll be pitching Goldman Sachs, the captain of high finance. And they just had an unbelievable earnings report, reporting $18.60 per share, which was complete blowout of estimates. Zacks consensus estimates was only $9.80, and that was an over 80% beat, demonstrating 500% year-over-year growth. And this company has a lot to be proud of. Their investment banking segment was up 73%. We had a slew of IPOs and a slew of volatility that drove this company during this pandemic, and they've come out stronger than ever. They've had 3 consecutive record quarters for EPS results and 2 consecutive quarters for sales results. And I think this company is something to invest in today, despite having an already 60% surge in the last 6 months. I think this company is one to take a look at, and you don't want to scoff off this number. At an analyst say they had a great year this quarter, because this would have been a great EPS number only a couple years ago. And ever since David Solomon has taken the helm of this company, he has just taken it to the moon. And I think this stock price, despite its already big run up, has a lot more room to go. So here's Goldman Sachs chart since last October, and we had a huge drop off. Obviously all the banks took a big beating when the Fed dropped the rates to 0, and you saw a 45% drop off here. But the company has blown up, like I said, in the last 6 months, and it's because of these crazy earnings that they've been having. They're one of the few stocks that actually remained buoyant throughout. I said this during some of my write-ups on the headline trader portfolio, that they're going to have to see some unbelievable earnings to sustain these crazy price movements that we've seen. Super optimistic. The markets are a little euphoric, honestly. We had this was the biggest economic contraction since the Great Depression, and the markets are seemingly scoffing it off. But Goldman Sachs is a perfect example of why. The company was able to produce, like I said, 3 consecutive record quarters in earnings, and it's a very impressive company that continues to impress even with expectations at sky high levels. And you can see we're trading with this 50-day moving average now as a support. My old price target here from the pandemic lows was 324, but I'm looking much higher. I'm looking to 400, 420. This stock is trading under its value right now, and even some of the most optimistic price targets are looking at 470, which is an over 40% increase from where we're trading at today. And I think we could hit that in the next 12 months. And the stocks, if you're an apprehensive investor, obviously this thing's had a run, but we have a 1.5% dividend. And I think it's a great long-term buy and hold. So I added this to the headline trader based off of their earnings last week, and I would recommend adding into your portfolio. So I'm going to hand this over to Ben. I believe he's pitching Sonos. So yeah, go ahead, Ben.
Hello, Ben Rains here, and today I'm taking a look at Sonos, which trades under the ticker SONO. Sonos is a high-end audio company that specializes in wireless and multi-room sound systems. Its speakers and sound systems are often compared to Bose in terms of quality and price. Sonos speakers are certainly not what many would consider cheap, but they are rather affordable considering the quality and important role they play in many people's lives. Its baseline smart speaker starts at $199, while its 4-system surround sound offerings can cost up to $1,900. Sonos offers a sleek and simple design in both black and white, and it has thrived in a crowded market that includes tech giants like Apple. The company also announced in November its new ad-free HD streaming tier of its streaming audio radio service. It's called Sonos Radio HD, which costs $7.99 a month and aims to compete against Spotify and other streaming services. More recently, Sonos on March 9th announced a portable smart speaker called Roam, and it costs $169, and now it's its more mass appeal speaker. The company's revenue has climbed 15% in back-to-back quarters, and its free cash flow jumped 97% last quarter to $203 million. Looking ahead, Zacks estimates call for its FY21 revenue to jump 18% to $1.6 billion, with FY 2022 projected to come in another 10% higher. These would come on top of FY 20's 5% sales growth and compare really well against 2019's 11% growth. More importantly, Sonos is also expected to soar from an adjusted loss of 18 cents per share last year all the way up to positive 78 cents per share this year, with FY 2022 set to climb another 21%. Sonos, which went public in 2018, has seen its stock price soar 385% in the last year and 80% in 2021. And at $42 a share, it now rests just off its recent highs. Despite its climb, the stock sits below overbought levels in terms of RSI at around 58, with 70 being that overbought level, and it trades at 3.1 times forward 12-month sales, which is right in line with its industry's average, even though it's crushed its industry in the last year. Investors should also note that Sonos in November announced a $50 million stock repurchase program after it completed its previous round of buybacks. In last quarter, it hit a record number of new customers and a record number of existing customers that added additional products. Sonos' positive earnings revisions help it grab a Zacks ranked number 1 strong buy at the moment, and it has an A grade for growth in our style score system. Therefore, investors might want to consider this growing high-end speaker company as millennials ramp up home purchasing. And that does it for today's top stock picks. Make sure to check out our latest Zacks.com/promo page for a peek at our surprise trader service to help find out which stocks will beat earnings expectations before the reports are released. This has led to double-digit gains in less than a week.